condition. Let's take a look here as we switch over from the natural gas market to $DXY. So our analysis had shown that the pattern in here was a big inverted head and shoulders, and that there was a lot of resistance up here at the major 50 right there, and now we've put in the major 61.8% that comes from the big peak a few years ago. Here's your big inverted head and shoulders that you see. Left shoulder here, head, right shoulder. Some of you may love cup and handles, and you have a little one of those right here, which almost always lives in a inverted head and shoulders or a double bottom. In this case, it was pretty close to a double bottom, as you could see. Then when this cycle ran out of time, we were suspicious that it would then be moving up sharply to the upside. So here's your fib confluences right up over here. Generally, the 78.6% is a target area for a fib confluence, and that's right up over there where we have it pointing, which is actually over 97, which could be what happens in here. You'll note in here that it's 1, 2, 3 weeks off of this trough. That is very early, and that says that even if you got some pullbacks in here, it's very likely that the dollar will be moving up again. This is a very strong condition that we see in here, and it's really interesting when I get into the metals analysis. You'll see that gold and silver, platinum, they're actually they're acting very strongly, and they could be setting up for upside pops of some significance on some minor pullbacks here in the dollar, which you see we don't really have going on right now. But we're at a point where we'll get up to that major 50, and you could begin to get a pullback. Now this inverted head and shoulders, that's the measurement line right over here, and you can see it coming down right there, and we've gotten very close to it. Right now it's at around 96.60. So it's just about fulfilled that, but it probably will get through that level in the dollar. So just a great pattern and great analysis, lots of strength there in the dollar market. Here we can see the shorter term patterns here in the dollar. Interesting that you can see the trough right over here that was really important. Here is your dominant cycle rhythm right in there, and this one ran a little bit long right there. There was kind of a little throwaway at that point to end it, but it got right into that support zone and then turned up. So this trough came at the same time as the weekly trough right over here. And the principle of synchronicity, if you are a student of cycle analysis, says that these should bottom together. These troughs should come together, which happened right over here. And look at this big upward spike. So what happened was that you got into this corrective period. You had been in a very positive momentum condition. For those of you that are watching for the first time, our momentum indicator is the slim ribbon right in here, and the slim ribbon PO is the signal indicator for the slim ribbon, and all this positive stuff going on right over here. Then it neutralized right through this corrective period where the slim ribbon kind of laid on itself. So there was no momentum that was readable here. Then after this engulfing right at that point, it started to improve, and then that green arrow shows you where the slim ribbon turns positive, and this green, is the same thing as this positive condition right in here, and it's been pretty strong. It hasn't even been able to pull down and give you any kind of a signal yet, and the widening slim ribbon tells you about the strength in there. Now you have this doji going on and this stalling, and this minor cycle likely to pull down. Now we're to get into this area right over here. This would be the top of that is the 38.2% fib, and that's at about 95.23. So were it to get down in here into this buy zone, well, this support is a buy zone, it would be very likely moving up again. So we want to always look for the highest probability entries in here. Now, if you don't like trading the dollar index or the dollar future, then you might want to trade the inverse to this, which is the euro currency. So we had looked for this period of strength in the dollar to come, and that would be inversely correlated with the euro currency, which we believed would be moving to the downside.